Welcome to CalCPA's Tax Bill Series. I'm Annette Nellen, professor at San José State University and a frequent speaker for CalCPA. Thank you for being here. So this series is focused on H.R. 1, otherwise known as the One Big Beautiful Bill, but more officially known now as Public Law 119-21, signed into law July 4th, and its official name is an act to provide for reconciliation pursuant to Title II of H.Con. Res. 14, but I'm pretty sure we're going to be calling it the OBBB or One Big Beautiful Bill for some time to come. I'm going to go through some background and some things to be cautious about in the bill on this first in this series. The key goal of this bill was to address the temporary provisions in the Tax Cuts and Jobs Act, most of which would be expiring at the end of 2025. Also to address some things that President Trump had suggested he wanted to have added to the tax bill. Plus, there seemed to be an interest in repealing some of the energy credits that had been added or expanded by the Inflation Reduction Act back in 2022. Now, like the Tax Cuts and Jobs Act, like the Inflation Reduction Act of 2022, this bill was put together under the budget reconciliation process. That enables that only require 51 votes in the Senate rather than the normal 60. But along with the budget reconciliation process, there are restrictions on that. For example, everything in the bill has to deal with revenue. It can't make any kind of a change to Social Security. It cannot be losing revenue in years 11 and beyond after enactment date, and it must have the word reconciliation in the name, hence the title I had just given to it. This moved fairly quickly. Obviously, they've known for some time, obviously, what the provisions are that expire, and they've known what provisions expire since they enacted the Tax Cuts and Jobs Act back in December of 2017. But once they got the bill together, we have fairly quickly in the House, May 22nd, they passed it by a very narrow vote, 215 to 214, but that's enough to pass the bill. And then kind of odd, and I highlight this because I think like today, July 8th, if you were looking for, I want the copy of the bill, you might find a variety of versions out there. And it's very important to have the last one. I also want to caveat that here on July 8th, if you go to congress.gov and pull up 119th Congress, H.R. 1, it does actually not have the final version in it. I am basing this as just about anything you're going to be reading in the news or social media. It's being based on what the Senate had passed, and then the House just passed exactly what the Senate had passed. But that is one challenge here. Do we have the actual final bill? I don't believe there's any changes. There may be some page numbering or something, but just be aware there's various versions. Then even though the House passed this on May 22nd, on June 11th, we have House Res. 492, where it just directs that they can make changes to it, and the House's employee retention credit provisions got pulled out and a few other things, which is a little puzzling. June 16th, the Senate Finance Committee released its tax provisions in this one big bill, and the word big is because it's got far more than tax changes in it. And that led to some discussion, lots going on in social media and in the press. Then the Senate, the entire Senate, releases on the end of June their version of One Big Beautiful Bill. They vote to advance it, and then they actually pass the bill, again, very close. The Vice President came in and made a tie-breaking vote on that. And then the Senate bill had some differences, like many differences from the House bill. But to move this along, the House just took the Senate bill and said, we will vote on that. And then that advanced to the president July 3rd. And he actually signed it on July 4th. And it just was given its official number of Public Law 119-21. So a few cautions I'm going to start off with here. When we have this fast moving bill, we see various versions of the bill coming up, as I had just noted, and still actually waiting for the official Public Law 119-21 version. I am going off the engrossed Senate amendment, which I believe is the same thing. But be cautious on what you're reading. I've discovered, for example, on social media, even today, somebody posting, oh, hey, our firm has a release on this, and you pull it up and it's the House version from May. Well, that's not going to do us a lot of good unless we're just looking at it for historical purposes. So be very cautious on what you're seeing. The best thing is always to go in and confirm in the public law itself, 119-21. While it's big bill because it's got far more than tax changes in it, it has just over 100 tax changes in it. Some of them are fairly straightforward. We're extending something, but there are numerous ones in there that add a good amount of complexity to the law, just to give you a heads up on that. Also cautions about, in the background about, well, what does this bill cost? Well, something that the chair of the Senate Finance Committee, Senator Crapo, had told us last year even, well, all these things that expire in the tax bill, like the lowered brackets, the higher standard deduction, the double child credit, everybody expects, even though the Taxes and Jobs Act says they terminate at the end of 2025, we all expect they're going to be renewed. So they're really part of our law forever out. So to extend them doesn't cost anything. That's not the normal way that things are costed in the way Congress measures, does something raise revenue or does it lose revenue? And so we actually saw that the Joint Committee and the Congressional Budget Office would do two revenue estimates, and they're quite different. The one that Senator Crapo was promoting was be called the tax policy baseline. We continue this policy and measured out over a 10-year period, then the whole package, the tax revisions cost just under $700 billion. But if you look at the normal way, they would, like they've cost the Taxes and Jobs Act and Inflation Reduction Act and any other tax changes, it be measured by, for example, the double child tax credit. It's certainly $2,000 for the year 2025. But the Taxes and Jobs Act said, well, after 2025, it goes back to $1,000. Well, if you're then going to say, oh, we're going to change what it is after 2025 to bump it back up to 2,000, that goes in as a revenue loser, less revenue coming into the federal government. Under that type of a measurement, it comes out to, under Congressional Budget Office, Joint Committee, about $4.5 trillion over a 10-year period. And that was part of the debate among some of the members about, well, how much is it adding to the deficit? It is what caused a few Republicans not to vote the bill. Also, be cautious on things that you're reading. Sometimes people oversimplify things. For example, I'd seen something recently about the SALT cap. Oh, hey, it's there. It's going to help all small businesses. Well, and then the pass-through entity tax. Well, recall that the pass-through entity tax helps all size businesses that aren't C corporations, and actually helps if they have a larger tax state tax liability than a smaller one, but it doesn't do anything for sole proprietors. Okay, there's also been some confusion. Did Congress get rid of the Notice 2020-75 that allows that pass-through entity tax? Nothing in the bill says anything about getting rid of Notice 2020-75. And then the SALT cap actually has been increased through 2029, but with a phase out with that. Also, be cautious about even what government agencies say. It was puzzling. July 3rd, something came out from the Social Security Administration saying that the law had actually basically eliminated the tax on Social Security benefits. It did not do that. It is not allowed to do that because budget reconciliation cannot do anything regarding Social Security. Here's for the tax provisions in here. They're in Title 7 Finance. It's Subtitle A on Tax, Subtitle B, and you can see the titles in there. You can even go to the whole bill. It actually does have a table of contents in it, as well as if you go to the Joint Committee on Taxation, look at the revenue estimates. That within like 8 pages, you can see a very quick summary as well as the cost or revenue raised or revenue lost by various provisions. That's a quick way to go here. I do want to just also caution, you'd say, oh, these tax cuts for small business or for middle-class families. We all should be cautious with years of experience. Well, what exactly is middle class? When it says, middle-class families, well, every taxpayer gets a benefit from the continued drop in the lowered rates. In fact, we only have up to 37% permanently going forward. There's no more 39.6% bracket, and less than 1% of the top we're in that bracket. So the brackets certainly benefit far more than just middle class taxpayers. There was one about the Chapter 4, investing in small business. Well, one of the changes in there is tremendous increase in the C Corp provision for investors in C Corps that meet the definition of a qualified small business corporation. But when we're talking about $75 million of assets, most people don't view that as a small business. Some additional cautions here. Many things were made permanent, but there are certainly things that are still temporary. Some new rules are fairly narrow as to who they will be affecting. Some provisions apply differently depending on the size or other factors of that taxpayer, just typical things we should be watching for. A few do have retroactive dates back to the beginning of 2025 or maybe even a little bit earlier. I'll address that in another the series here. Some have unexpected termination dates, particularly for energy credits for individuals, and I will come back to that one. Just want to give you a caution. Some new requirements that having a social security number, new and changed information reporting requirements, new phase outs for some of these provisions, new deductions, and for new deductions, like we heard, oh, we're gonna have a tip or overtime deduction. It's always important to know, where does this fall in the tax formula? So don't make an assumption, oh, it's gonna, lower our AGI or something along those lines. Check where it falls into the formula to have it done correctly. Some provisions will encourage taxpayers to improperly reduce their taxes, and that's going to cause tax professionals to have to, ask more questions, because your client might say, do I really need that contemporaneous written acknowledgement? Yes, they are going to need it if it's a donation of $250 or higher. And then just lots of new complexity on these items here. And of course, we're waiting to see what the states will do. California is not a rolling conformity state. We have to pick and choose what we conform to. But even I think in rolling conformity states, I think there's some provisions they might opt out of, such as I think some states will not also give the deduction for tips and overtime. Some of the new provisions added to the law, we've got items listed here, and some of these actually do go into effect for 2025, and these slides can be posted here as well if you want to see highlights of new items here. And some of the series will go on to go through some of these, and of course with year-end updates we'll go far deeper into these items here. But here's some new items for individuals to be aware of, and then here's some new items for businesses as well as tax exempt to be aware of as well. And some of these are significant, such as some additional write-offs of even real property here. So I will end this introduction here, just various things to be thinking about, and watch out for additional parts of the series, including I'm going to do another one with some additional key reminders about like the retroactive effects here. So thank you.